A tax refund is money returned to you by the government when you have overpaid your taxes throughout the year. Think of it as an interest-free loan you gave to the IRS. You paid more than what was actually owed. Data from the IRS shows that the vast majority of filers get a refund check every single year. Refunds occur when your withholding or prepayments are higher than the final tax amount you calculate on your return. While a refund is the money returned, a tax credit is a tool that helps lower your bill and potentially increase that refund. Choosing direct deposit is significantly faster than waiting for a paper check to arrive in your mail. While getting a big check feels great, some prefer to adjust their withholding so they have that money in their paycheck all year. Thanks for watching. Remember to check your tax withholding annually to keep your cash flow on track. Subscribe for more financial basics.